May 30th, 2025. I had a pretty all right day today. Actually, I did really well with managing my trades. So, anyways, I'll just get into it. We had consecutive bear bars on the open, bars 1 and 2. Odds are 1 and 2 is big enough to get some sort of second leg. You can see we got it on bar 4 and the tail on bar 5. We had 3 legs down, 1, pull back 2, pull back 3, and then a strong breakout bar on bar 7. So it's reasonable to buy the close of 7. It's a big enough bar that it's probably going to get some sort of second leg up. So it's okay to buy. We got follow through on 8 and then a 3-bar micro channel, 7, 8, 9. Obviously, the 3-bar micro channel is towards the top of a trading range, but it does break out above the bar 4 high. And it does break out above the 1 high as well. So I did buy the close of bar 9. I was hoping we would get immediate follow through. And when we do get immediate follow through, depending on the kind, I do like to add to the trade, and 10 is a good enough immediate follow through for me to add to the trade. So I bought the close of 9 and I added on the close of 10. The reason I add on the close of 10 is there is a 96% chance that I'm going to get at least half an R, or half the range of the 7 low to the 9 close at some point, which means that even if this trade goes against me, I know it's going to give me a chance to get out around break even or with a small profit. So I look to add when I get immediate follow through and be a little bit more aggressive, knowing that there's a 96% chance that I'm not going to lose money. And of the 4%, the vast majority of them, I couldn't find an example in leg 1 in that 4% where the market reversed on me like that. So we get 3 legs up, bar 10, 12, 14, and then we get 15, a bear bar closing near its low. On the 15-minute chart at this point, I don't know why Globex is on for this. I thought I turned it off, but regardless, for the 15-minute chart at this point, the breakout point was this high, the 945 high. So I thought odds were we were going to touch this high, and this is after this breakout, which was the 3-bar micro channel, and the high of bar 4 was that area. And 15 is a good enough breakout bar to get a second leg down. And so I assumed when I got 15 that we were going to touch the bar 4 high. I thought that made sense. But since we had not gotten the half an hour move yet from 7, 8, 9, I decided to stay long and just look to scale in. So I scaled in a couple of times on the way down. We got 3 or 4 legs down, however you want to count it. You could go 1, pull back 2, pull back 3, or sorry, 1, pull back 2, and then pull back 3, pull back 4. Or you could just do 1, pull back 2, pull back 3. Either way, it's less important if it's leg 3 or 4. It's more important that it's a late leg. And then we got bar 23. My problem with this move down was how it started. I don't like my pullbacks to start with these strong bars. I'm going to be researching this weekend how often we get those 1, 2, or 3-bar breakouts against me to start a pullback, and I want to know how often that leads to a losing trade, so I can have a better management strategy. The more that I trade. So my issue was that it was a 3-bar micro channel. And, if you've watched me for any amount of time, you know that I expect a second leg when I get a 3-bar micro channel. It wasn't a great 3-bar micro channel, but it was still a 3-bar micro channel against my position. So what I did was I took my 0.5R on bar 24. It's going to occur. You don't always know when, but we started rallying on 23 and then we rallied a little more on 24. And so I got out right here. I made a profit on the trade from my scalings and basically broke even on the other 2. But I made enough on the scalings that I made a little bit of money on that trade. And obviously, the 7, 8, and 9 did not get a symmetrical second leg, and it ended up selling off. And the thing that I'm trying to work on is just figuring out how to avoid those losers. I did the same thing on 40. Actually, I'll get there. So I did not sell 27. I had just gotten out of a trade. And I had stepped away, so I did not sell 27. It's also leg 4, right? 1, pull back 2, pull back 3, pull back 4, or whatever leg it is. It's not leg 1 or leg 2. And I'm really trying to avoid not trading trading anything other than leg 1 and 2. But there's nothing wrong with 27. There's still these 3-bar micro channels still work at some frequency, just a little bit less often in later legs. So we had a triangle forming, obviously. And when you get a triangle forming, 50% chance the first breakout fails in either direction. 33, 34, 30. So 32 would be the failed breakout to the upside. And then 33, 34, 35, 3-bar micro channel is a downside breakout. I was looking to sell. I wanted one of three things to happen. I wanted either 35 to close strong because we didn't quite break out below this low. It was a breakout of the triangle, and I wanted to go short. I had my finger on the button, but 35 didn't close strong, so I wanted to either sell a pullback or sell if we got an immediate follow through bar. The odds of getting an immediate follow through that reaches the full 1 hour range, within 1 bar, or it's like 2 or 3%. So I just don't normally consider it as a possibility. I was hoping to get, a good bear bar as follow through, and then I was going to sell the close of that and look for some sort of move down. But obviously, then we just got a huge bar on 36. So I was just like, okay, fine. I just missed that one. But I wanted to sell pretty much any bear close I would have sold because, again, that increases the chances of me getting that at least half an hour, which we get over here. Like I said, that 96% of the time. But obviously, we went straight to the target. So I missed this trade. 39, 40, 41. Spike, pullback, potentially the start of a channel, ended up being a trading range. I did sell 41 and I scaled in. 42 is, it's a potential midday reversal. So what does 42 need in order to be a convincing midday reversal? Buying above 42 is a swing trade. What does it need to be to get to become a high probability trade? It needs a follow through bar that's ideally bigger and better than 42. And 43 qualifies as a follow through bar that is bigger and better than 42. So I have a couple of options here. I've been scaling in, obviously, as you guys know how to do that. I can either exit directly above 43, which is probably fine. But when I do not get immediate follow through, I have an 89% chance of getting at least a 0.5R move that allows me out at break even. And so I decided to rely on that instead. It ended up getting me out at a slightly worse price. So I got out right where the red line is. That got 0.5R. But basically, when I got the consecutive bull bars, I'm now looking for a way out. And then I got a really large bull bar on 44, so I kept scaling in, and I got out on 46 for a small loss. So I was down very slightly at that point in the day. I made a little bit here, lost a little bit here. And then 44 was a good looking bull bar. And this is a trading range, right? How do you know it's a trading range? Well, does 42 through 44 happen in the middle of bear trends? It's pretty unusual for that to happen in a bear trend. So this is it's a scary sell off, but if we're going to get 42 through 44, I'm convinced it's a trading range. If it's a trading range, gaps should close. So we should get back to at least the bar 5 low, the breakout point, and potentially go a little bit higher. A lot of times the market likes to test the apex of the triangle as well. So I thought that was possible as well. So I did not buy the close. Obviously, I was still short, and then I got out here. So I was not yet long. When I got 46, 46 is a high one. Do you want to buy a high one right at the moving average on a trading range day? No. So where should you buy? You should buy below the high one because high ones are momentum trades. They're low probability trades. So odds are we're going to go a tick below 46. So I bought tick below 46. And I held for most of the symmetrical second leg. I got out in this area. There was it was stalling, and there was 3 points left to my profit target. And so I just ended up taking it. You can see we get 3-4 legs up, and then a breakout above the bull flag. I did not take 57 simply because I just decided I was done for the day. 57 is a good trade. I just didn't take it because I just decided to be done for the day. But that's a pretty strong trade on 57. You buy the close. Maybe you buy below 57 and you get your symmetrical second leg. You can scale in, expecting that you get another leg up. So maybe you scale in, 60. Well, 61 needs a second leg is the problem. 60, 61 is going to get a second leg. So you get a pullback on 62, and then 63 is the second leg. So that's really all that the bears are going to get here. And then it's okay to look to go long again after the bears get 2 legs down. First move that needs a second leg, and then the second leg. And that's really it. I think that this worked, right? Sorry, I'm just, okay, yeah. Anyways, the daily chart. The daily chart Could be forming a triangle. It's really just a tight trading range. You can say whatever you want about it, but it really just looks like a tight trading range, and it looks like we're in breakout mode. Do we break out to the upside? I don't know. I mean, this was a leg in a trading range. It's not moving. This doesn't move like a trend, so it looks like it's going to be a leg in a trading range. So I don't really. There's not a lot of clarity up here. Is kind of what I'm getting at. We've had a lot of bars above the moving average, good for the bulls, but just not a whole bunch of clarity as to what should be happening next. The weekly chart, we have 4 legs up, and it's looking like we're going to get a disappointing close on that bar. So again, not really all that great for the bulls, but you don't really want to sell up here. We've had like a 4 or 5 bar, 6 bar micro channel, so it's tough. There's just not a lot of it's trading range behavior, right? The monthly chart has closed as of today, and that is probably not the bar that the bears wanted to see after a 3 bar micro channel down, getting a big bull bar. So really not all that great for the bears, but they should still get some sort of second piece or something to the downside. I'd imagine we will touch this high, 57.7325. I would be surprised if the bulls kept the gap open. So I think we should at least go to this high at some point next month. All right, that's going to be it for this video.